Well, yeah, and you mentioned Kohl's, and that was going to be kind of the segue is when you think about some of the leadership changes at Macy's, you're also seeing that in other spaces in retail. For Kohl's, we know that they're still going to be trying to backfill for that CEO role that has been left vacant at this point. And so with that in mind, Kohl's, they actually withdrew their 2022 sales and profit forecast in this most recent quarter. Yeah, expected, pretty much.
Outgoing CEO Michelle Gass has left Kohl's a steaming hot pile mess. No guidance, terrible sales, really bad margin structure. This new CEO that eventually comes into them, whether it's the interim CEO, Tom Kingsbury, whether he keeps his job or whoever they bring in here, they might have a full year restructuring plan to get this company fixed because of the mess she left them. Now, we talked to Chip Bergh last week. He defended Michelle Gass. She's going to be taking over as president of Levi's, likely to be the CEO 18 months after, but guys, I don't understand how she got this job. I don't get it. And I love Chip. Big Chip Bergh fan.
Inventory was up as Kohl's as well.
Inventory, although the inventory build slowed, it was only 34%. It was up 48% last
Relative to Macy's, only up 4%.
Yes.
It tells you how bad Kohl's has been managed.
But Macy's is really the outlier here, to be clear, right? Nobody else that I can remember reported a single-digit build in inventories. That said, most of the inventories we've been getting for this current quarter reporting have been a little bit better than that 34% build. The gross margin did shrink year over year as well. It was about in line with estimates, but still, it's not a great performance.
One tiny point, what makes this quarter even more disappointing, they now have hundreds of shops, Sephora cosmetic shops. These are supposed to be big traffic, sales, and margin drivers for Kohl's. None of that is in these numbers, and that's a big red flag.
All right, we're going to continue to watch that. The beauty category has been one of those outperformers over the course of this last quarter. Also, we're tracking shares of Nvidia this morning. They're on the move, down by about 1.3%, though, as of this point in time, after the company issued guidance that fell short of expectations as chip makers struggle with supply and demand. Yahoo Finance's tech editor, Dan Howley, is here with the details. Everybody's always going to struggle with supply and demand here, but for Nvidia, it's outsized. Dan, what stuck out to you from the quarter?
Yeah, well, let's real quick just go over some of the numbers that we saw. They beat on revenue. They came in at $5.93 billion. We were expecting $5.79 billion, so a really good beat there. But then on adjusted EPS, they missed. They came in at 58 cents per share rather than the 70 cents per share that was expected. The big thing, though, is they managed to beat on gaming revenue, and they managed to beat on data center revenue. Now, what we're talking about going forward, though, is in Q4, they missed about $90 million in guidance. So, they came in saying they're going to have around $6 billion. Wall Street was expecting $6.09 billion in revenue for that coming quarter. And, I think the important thing to talk about is data center revenue jumped 31% year over year in the quarter, right? That's very good. Gaming revenue, oh boy, that fell off 51% year over year. And that's just that COVID explosion that we saw in gaming sales. And as a result, they had to build up a ton of inventory. And then as the economy started to slow, people started buying less. So they had this huge, massive inventory that was built up. Now they're talking about their inventory getting more even. They had lowered their sell-through to partners to get that inventory into a better space for them. And they think as they get out of Q4, it should be at the right level. The problem, though, that they're seeing is while they're seeing some very decent sell-through when it comes to the Americas and EMEA, what they are seeing is a slower amount of sell-through in the Asia Pacific and China areas. They say that's related to the lockdowns, but China's a huge gaming space, right? So, that coupled with the data center space there, that's problematic. They did discuss the fact that they had to pull back on that chip that they had tried to launch in China, and then we're told that they needed to not do that because of government restrictions. They put out a secondary chip for that, and they're seeing sales there. But yeah, I mean, this is a better story than expected from Nvidia, just based on the fact that they had missed so badly on the prior quarter.
And speaking about China a little bit more, the company actually wrote down $702 million worth of inventory in the last quarter, related in part to China. And it seems like it's not just the lockdowns, Dan. It also has to do with new U.S. regulations, right, governing over who can sell into China. Did we get any commentary or clarity around what effect that's going to have going forward?
Yeah, so what they managed to do was they have a new A800 chip, and what the chip that they had to stop selling in China or prevented from selling was an A100 chip. those numbers mean nothing to you, mean really nothing to most people. But what matters is that the A800 is a bit slower as far as bandwidth goes than the A100. So it's not as powerful of a chip as what originally they were hoping to sell in China. That said, they are still getting orders for it. So that's the important part. And they said that any kind of impact that they would have seen from those restrictions on sales were really kind of overshadowed or kind of put to the wayside because of better performance elsewhere. So it's not as though this really stung them. They were expecting it to hurt them pretty badly, but then they rolled out this other chip and they managed to get the all go for them to start selling it there. And really, the reason why those restrictions are in place, or why the government put those restrictions in place, is because of fear that this is going to be used for AI capabilities. That's what the chips are for, right? That's what Nvidia is known for. The government says that China could use that for military applications, and clearly they don't want that to happen. So they're saying, look, we'll just kneecap them, give them this lower chip, you give us those good chips, and everything's all hunky-dory.
Dan, really Nvidia burst onto the scene for investors in 2020 and 2021 because of what they were doing in terms of crypto mining. I found it surprising when they talked on the call last night, they were expecting nothing from blockchain essentially moving forward.
Yeah, Jensen Huang basically saying, that that's not going to be part of their business. There was discussion of what about the resale market. He had basically said, look, people are always selling and reselling our cards and chips on sites like eBay. That's been going on forever, and that's not really going to impact their core business. But yeah, I do think, the broader history of Nvidia has really nothing to do with blockchain or crypto mining or anything along those lines. They were growing steadily. The real emphasis for this company, and the reason why it was growing so steadily prior to that explosion in blockchain and crypto, was because of their data center business, and by the way, their gaming business, which they're kind of going back and forth between which is the larger one. Traditionally, it was gaming, and then data centers started taking over, and then we saw the gaming explosion during the pandemic. But crypto, blockchain, that really wasn't part of it. It was just those folks coming in saying, we need these to do crypto mining because they're better suited for it than standard processors, and so they've bought them up by scores, right? And so that led to inventory issues because Nvidia started pushing out more inventory to make sure that they were meeting demand. Now, though, it doesn't look like that's going to be an issue for them. They just think that other people are going to buy the other devices that are on the resale market, or the devices that are purpose-built for crypto mining. So I don't think it's going to be much of a problem unless this crypto winter starts to thaw out and people start going gangbusters for it again.
No signs of that anytime imminently, at least. Thanks so much, Dan. Appreciate it.